Hello, my name is Drew Ballard. I'm an actuary with Foster & Foster, and the purpose of this recording is really to help the membership of the Hialeah Employees Retirement System get familiar with the new online benefit calculation admin portal system that will be going into effect soon. So the purpose of this recording is really to help familiarize you with how the software works and to show you how to navigate through the online portal. It's really not meant to focus on the different benefit tiers for each group, but really to help the employees understand how to get around the system and how to use it most effectively. So I'm going to go through a few sample calculations for a few sample participants during this recording to really help, hopefully, the members understand how they can use this to the best of their ability. So you can see here the home page screen that is brought up in the portal, and this is really what the login screen will look like once you have logged into your own account. So you'll see at the top of the page we have a participant pension summary. So as soon as you log in as a member, this is the screen that you will see, which has some information regarding your pension benefits. And you can see that we list the normal retirement date here, the vesting percentage, the amount of service you have in the plan. We would also list if there was any purchase service there, if there was any lost service or breaks in service would be listed there. We have the date you became a member, and then again we show the annuity savings fund balance here based on the most recent information. So this is really some pertinent information that you will see when you log into your screen that is specific to your pension that should help you when you're entering certain dates as far as your normal retirement dates in the calculation system as to what to use or if you want to estimate your benefits in the future. So if you click this home page, you can see there's a little drop down button there. If you click that drop down button, you get some options, okay? And what we want to do is run benefit calculations. So the purpose of this recording again is to show you how to familiarize yourself with the system and ultimately how to use the benefit calculation software when running pension estimates. So depending on what your tier is, or if you're partially grandfathered or not grandfathered, will help determine which of these options to use here. So you can see that there's two options. One just says benefit calculation estimate, and one says future benefit calculation estimate. So if you as a member are subject to any of the frozen benefit provisions, then you would run a frozen benefit based on what is listed as the benefit calculation estimate. And then you would run the future, or the benefit that's earned after the new contract date, based on the future benefit calculation estimate. So if you just click that drop down, you can change which one you want to select. And at the top here, we included a note in the box here that says if you are a non-grandfathered general employee or a police officer in Tier 1E, 1F, 1G, or Tier 2, then you will need to run both types of calculations below, the benefit calculation estimate and the future benefit calculation estimate. All other employees will only need to run the benefit calculation estimate. So depending on how much service you had at the change date will help you decide which calculation estimate you need to run. So the first person we're going to run, you can see here, is a sample Tier 1 firefighter. So at this point, firefighters have not had any benefit changes made in the fund. So besides being Tier 1, Tier 2, so there's no frozen benefits for firefighters. So any firefighter is going to use benefit calculation estimate run. And as we saw on the home page, this member is not eligible for normal retirement until March 1, 2029. So if we wanted to run a benefit calculation and this member decided they were going to terminate employment today, which is July 17th, and they wanted to begin receiving benefits today, which is July 17th, they would select that. Another thing at the bottom, if you are calculating benefits based on retiring in the future, as a member, you can enter what your expected pay increases will be from today until retirement, and those increases will be used in your pension estimate. If you do not enter anything in here, it'll be submitted or defaulted as 0%. So you can see there's a few more things down here regarding checkboxes. So one is you need to remember that these benefits are estimates. So before you can run any calculations, you will need to agree to the terms and conditions. So if you click that link, the terms and conditions will pop up and you can read these. Basically, it says that this is only an estimate. Your final benefits will be provided to you at the retirement office on the day of your appointment. If you have any change or believe there are any errors, then you will need to talk to the retirement office, and the board of trustees will approach that as appropriately mannered. So basically you can read those, and basically just says that it's an estimate and your final calculation will be done at the retirement office. So once you agree to those terms and conditions, then you can calculate the benefit. So this member is not eligible in 2029. So you can see that the system says the earliest pension start date you may enter is January 1st, 2033. That is when this member would be age 50. The sample firefighter would be age 50. So it's the system is user friendly, that if you enter a date in which you are not eligible to receive benefits, it will tell you what that earliest date is. So let's say that we wanted to change that to be January 1st, 2033, when this member will be age 50. So now once you hit calculate, you'll see the box that says it's processing. It takes a few seconds to format all the pages and run the calculations, and then you will have either a new window pop up with the calculations, or a PDF will pop up with the calculation results depending on which internet system you are using. So you can see here I have a PDF that popped up, so now I can open that PDF and it has the calculation results here. So once you get into here, really the calculation details might be different depending on your tier in the system, but all of the calculation details and all the information that's used in this calculation is going to be listed on this benefit calculation sheet. So you can see here we have the information that was used, your name, date of birth. Again, this member was born in 1982, so turns 50 in December of 2032. So the first date they commence, it would be January 1st, 2033, which is what we entered in the system. Hire date, date of termination for the calculation, how many years of service, what your normal retirement date would have been, which would have been age 55 for this member, had based on the termination date of 2019. And then if you scroll down is when it really gets into the numbers and the details of the benefit calculation. So here you can say, here's the details that were used for the calculation. The years of service, the benefit rate, again, that will change depending on if you work to normal retirement age. It could increase to 3% per year. So as you change termination dates for different benefit estimates, the benefit rate will automatically update to be the most accurate benefit rate for the calculation date that you chose. So for this calculation is 2% per year up to the 30 years. And then it shows the average final compensation used for the calculation, and then shows the annual basic pension benefit. So since this member terminated prior to normal retirement age, that benefit would be $2,800. And here under letter A, it shows you the formula that is used to determine the annual pension benefit. So you have the basic pension benefit of $2,800 plus your 2% times service times your average final compensation. So that gives you the annual benefit here, which would be the monthly benefit below divided by 12. And then the last thing would be to apply any early retirement reduction. And since for this calculation purpose, we chose to commence benefits at age 50 compared to age 55, there would be a 3% reduction for those 5 years. So a 15% reduction or an 85% factor. So for this calculation, the monthly benefit after early retirement reduction is shown here. If there was no reduction, the bottom two numbers would be the same. And then last thing at the bottom, it shows the normal form of payment and any optional forms of payment. So that really shows all the details of the calculation that are used in the system. And again, depending on your tier, those details could be different. And I'll show an example of that shortly. And then there's one more page which shows your annuity savings fund, your total balance, and then what that would be as a monthly annuity and any loan balance that exists. So if we go back to the benefit calculation, remember that we are showing a termination date of today prior to the member being eligible for normal retirement. But on the home page, we also showed that the member's normal retirement date would be March 1, 2029. So what if this member wanted to do a benefit estimate calculation if they worked until normal retirement age of March 1, 2029? And let's say we wanted to include 2% pay increases. So we add 2% in the pay increases. The terms and conditions are already checked. So now we can rerun another calculation. And really, it's important for you to remember that you are able to run an unlimited number of calculations to help with your retirement decision-making process. So you can run different dates, say if you want to retire a month earlier or a month later or a year later or 2 years later, or different pay increases. You can run all of those scenarios within the system as frequently as you would like, and the system will automatically calculate what the benefits will be based on the information that you have entered. So the calculation downloaded, so I've now opened up the second calculation that we ran, and you can see here that we are using a termination date in 2029. So this is when the member would have reached the rule with at least 20 years of service to be eligible for normal retirement in the FIRE plan. So the important thing to look at here is, well, now the benefit rate is going to change now that the member works to normal retirement age. So you can see the years of service, and the benefit rate is now 3% per year. Okay. The average final compensation has increased significantly because we included 2% pay increases until the normal retirement age of 2029. The basic pension benefit is now $1,800 instead of $2,800, and then it shows you the COLA percentage and when that COLA will start and end. Okay, so again, on letter A, this shows the formula that is used to determine the pension, and you have the basic pension benefit plus 3% times years of service times average compensation gives you your annual benefit, which below gives you your monthly benefit, and those are the same for this calculation since there was no early retirement reduction. And again, at the bottom, you have your optional forms, and second page shows your annuity savings fund balance along with the monthly annuity and any loan balance. So that's really, a straightforward example. A firefighter who doesn't have a frozen benefit calculation, anybody who doesn't have a frozen benefit calculation will only need to run one calculation using the benefit calculation estimate. As mentioned again at the top of this page, if you're a non-grandfathered general employee or a police officer in Tier 1E, Tier 1F, Tier 1G, or Tier 2, you'll need to run two types of calculations to get the total retirement benefit package, which would be the benefit calculation estimate, which shows your frozen amount, and then your future benefit calculation estimate, which would show any benefits earned after the new contract date. So now I've now switched to enter or to show our second sample participant, which you can see up here is a sample partial for the AFSCME employees. And what's interesting to show here is, again, we have the login page or the home page for the member, and you can see the normal retirement date. This member is beyond normal retirement date, but what's interesting, as I mentioned earlier, this member had purchase service of 2.7528 years. So any purchase service, if you have it, will show up in this participant summary. This member also had some lost time. So it shows the lost time start date and lost time end date. So it shows that break in service that would be incorporated into the calculations. So for this sample partially grandfathered member for the AFSCME, again, they were already eligible for normal retirement. So if we said that they wanted to terminate today and begin benefits today, we could do that. And again, this member would not be subject to any of the frozen benefits, so we only need to run the benefit calculation estimate. And we don't need pay increases, and the terms and conditions are already checked. So we can run a calculation, and what we'll see here is that the benefit will be a little different, as it will always be adjusted to be the correct benefits depending on what tier you are in as a member. So the calculation results are ready, and you can see here that we have AFSCME employee who's partially grandfathered based on this birth date and hire date. And here it shows you the tier of partially grandfathered. And we have the details of the benefit calculation. So this member has almost 26 years of service and is subject to different benefit rates. So since they are partially grandfathered at the contract date of December 1st, 2017, their benefit rate is 3% for years of service prior to December 1, 2017, and 2% for each year thereafter. Here's your average final compensation, base pension benefit, COLA information, and again, the formula is shown right here to show you the details of how your benefit is being calculated. So we have the basic pension plus the multiplier times service, which is 3% for 21 years, December 1, 2017, plus 2% for all years after that, including the time purchased, times the average final compensation gives you your annual benefit. And again, as always, below that will give you your monthly benefit. So you can see how the system will automatically adjust based on how much service you have on each calculation date, so that the benefits being calculated are always accurate based on the provisions in the plan. And now what we're going to do is show you how if you are subject to the frozen benefit at the contract change date, how you would run both calculations. The final sample member we want to use, again, was somebody who would be subject to a frozen benefit at the change date. So you can see here, we're using a AFSCME employee who is non-grandfathered. Again, under the pension summary, now we have quite a bit of different information and more information for this member, because we show the normal retirement date for the frozen benefit piece, the normal retirement date for the future benefit piece, the vesting percentage on the frozen benefit, and of course any other information based on service and the annuity savings fund balance. So here you can see that this member's frozen normal retirement date is September 1st, 2023. And the future normal retirement date is November 1st, 2029. Okay, so let's say that we wanted to run benefit estimates for this member who wants to retire at the normal retirement date under the future benefit, which is the after contract benefit. So we're going to use November 1st, 2029 for our benefit estimates. So again, if we go to the benefit calculation tab, you can see here that the non-grandfathered general employee will need to run both estimates. So we'll first run the frozen benefit, and we were going to use November 1st, 2029 as the calculation date, saying that that employee will continue working until that date. So what we're first going to do is run the benefit calculation estimate, which will show you the member all the details of their frozen benefit calculation. And then once we've done that, we will run the after contract or future benefit calculation. So here we've ran the frozen benefit calculation. You can see that the details show the frozen accrued benefit as of December 1, 2017, your service as of December 1, 2017, the applicable benefit rate, the average final compensation as of December 1, 2017, and then, of course, the basic pension benefit and any COLA information. So again, under A, it'll show you the basic pension plus your multiplier times service times AFC, which is based on the December 1, 2017 frozen date to show you the frozen benefit amount on an annual basis and on a monthly basis. So we'll be able to see that is the frozen benefit piece. In order to run the second piece of benefit, these members will need to run a future benefit calculation estimate, and you can use the same dates here, November 1, 2029, and we're not going to include any pay increases for this purpose because we're really just trying to show the members who are subject to the frozen benefit that they need to run two separate calculations in order to see their total retirement benefit. So the next calculation we're going to see is going to have all the details for that benefit earned after December 1, 2017. So again, we've got an AFSCME non-grandfathered employee terminating in 2029 where they were eligible for normal retirement. And instead of the frozen benefit, now the details are only going to show the benefit accrued after that change date of December 1, 2017. So it's going to show the years of service after that date, the applicable benefit rate for the future benefit service, the average final compensation used, vesting percentage, and then COLA. And there's no COLA for the after piece, so it shows that that is the case. And then under A, you have your 2% times your service after December 1, 2017 times average final compensation, which gives you the annual benefit and the monthly benefit. So the monthly benefit here plus the monthly benefit for the frozen piece can be added together to be the total monthly benefit at retirement. So what's interesting there is that the members will need to keep two different pieces of paper to show the frozen benefit, how that might change, and then the future benefit, how that might change, and add them together to show the complete retirement benefit. So just a couple other things to note. You can see here on the benefit calculation tab, there's a box to say store calculation in documents. So if you would like to save the calculation results, you can hit store calculation in documents. And once that calculation is ran, under the drop down, you can go to pension documents, which would show you under participant documents any calculations that have been saved. We also have a bunch of company documents, which has a bunch of forms included in each member's account. So you'll have some information like a direct deposit form, change of beneficiary form, retirement applications, any forms the board of trustees or the retirement office wanted to include in your account will be saved there. So to illustrate how we can store the calculation, let's say we ran that same calculation that we did for the future benefit piece, but decided to store and click store calculation in documents. So the calculation is going to run the same as it always would for you to view, but the difference is now it will be for as long as you want to keep it there. So again, the calculation still comes up as normal as we just looked at, but let's say we went back and went to pension documents. Now you have a portal calculation saved in your account so that you can revisit it. So you can open the calculation anytime you log into the system, and it'll be the same calculation that we just looked at. So there it is again. So that can be very helpful when running different estimates with different dates, that you can go back to look at how the calculation result changed based on those dates. You can delete it right here in the actions, or the other option is you can edit it. So you could go in here and instead of it being a portal calculation, you could say future benefit November 1, 2029 retirement. Okay, to help you remember what each scenario was. And then that'll save automatically in your documents and will be there again as long as you keep it there. And if you have some questions, you can call the retirement office, which the number is listed at the top here. And Griselle will be able to look at your calculation using her login and talk you through any questions you might have, and will be able to help because the document will be saved in your account. So you can use that feature to save any calculations that you'd like to revisit, or to help talk to a financial advisor or the retirement office to help understand your retirement benefits based on possibly different retirement ages or any scenarios that you would like to use. Because remember, you can really run an unlimited amount of calculations on the system to help you during the decision-making process. And that really gives you a highlight of how to use the software. Obviously, the benefits could change based on the different dates that you enter, but hopefully you will find this recording helps you navigate through the system and helps you understand this benefit calculation tab of how to use it, how to enter the correct dates, salary increases, and if you're subject to a frozen benefit, that understands that you need to run 2 calculations based on the options available. Thank you for listening to the recording, and if you have any questions, Foster & Foster will be here to help, and the retirement office will also be available to help navigate you through the portal and the new online system, and we hope that you find it useful as you begin your retirement decision-making process. Thank you very much.